Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets big companies don't want you to know. Today, we are diving into a very interesting filing from Intelligent Biosolutions Incorporated where they are making a major change to their stock structure. And before we get into the nitty-gritty, make sure you hit that subscribe button so you don't miss our future breakdowns and join our Discord community linked in the description below. We have some great discussions happening there. So what we have here is an 8K filing, which is basically a report that companies have to file when something significant happens. Something that investors should know about immediately. The big news here revolves around a corporate action that took place on the 12th of December 2025, which is a reverse stock split. Intelligent Biosolutions Incorporated, also known as INBS, is behind this move. This company was incorporated in Delaware. Now, usually when we talk about stocks, we are interested in their common stock, which for INBS has a par value of $0.01. Their stock is traded on the Nasdaq stock market, which is a pretty big deal. Interesting to note that they are still considered an emerging growth company, which means they have some regulatory flexibility. Okay, so the main event is a modification to the rights of their security holders. This falls under amendments to their articles of incorporation and bylaws. So what happened is that at a stockholder meeting on the 16th of October 2025, the shareholders approved a plan to do a reverse stock split. This amendment to their foundational document allows for this stock split. The company's board of directors had the flexibility to choose a split ratio anywhere between 1:2 and 1:10. And ultimately, the board decided to go with a 1:10 reverse stock split. This amendment was officially filed on the 12th of December 2025, and the actual split effects will happen on the 15th of December 2025, right before midnight Eastern Time. What this means is that for every 10 shares you owned before the split, you will now have only one share. So if they had about 9.6 million shares outstanding before the split, they will have around 960,000 shares. After this is a way for companies to reduce the number of outstanding shares, typically to increase the per share price. Importantly, the total number of shares the company is allowed to issue stays the same at 100 million. This split also affects things like stock options and warrants. So if you hold those, expect your terms to be adjusted proportionally. The stock ticker IMPS will not change. However, there will be a new CUSIP number, which is like a unique identifier for the stock. And for anyone who ends up with a fraction of a share, after the split the company will pay out cash instead of issuing that tiny fraction of a share. Moving on to other events, the company also announced this reverse stock split via a press release on the 12th of December 2025. This press release confirmed the 1:10 split happening on the 15th of December. Now let's look at some of the numbers before and after this split would have impacted the company's financials. Looking at the 12 months ending the 30th of June 2025, the net loss was $10,568,733. And on a basic shares outstanding basis, they had 5,273,643 shares. This resulted in a loss per share of $2 for that period. Now, if we look at the post-split numbers for that same 12-month period, the shares outstanding would be reduced to 527,365. And the loss per share would jump up to $20.04, this dramatic increase in loss. Per share is a direct consequence of the reduced share count after a reverse split. It does not mean the company lost more money, but rather that the existing losses are spread over fewer shares, making each share appear to carry a larger burden of the loss. Let's also check the 3 months ended the 30th of September 2025. The net loss here was $2,983,006, and they had 8,546,934 shares outstanding basic. That works out to a loss of 35 cents per share. And again, looking at the post-split scenario for this 3-month period, shares outstanding would be 854,694, and the loss per share would be $3.49. These numbers show the mechanical effect of a reverse stock split. It concentrates the ownership and can make the per share price look more attractive to investors who might be put off by very low stock prices. However, it does not change the underlying value or profitability of the company. This section lists the documents supporting this filing. Exhibit 3.1 is the actual certificate of amendment for their incorporation document. And Exhibit 99.1 is that press release we mentioned earlier. Finally, we have the signatures section. This report is signed by Spiro Sekiris, who is the Chief Financial Officer, indicating that these actions and disclosures have been duly authorized by the company leadership. So what is the story here? Intelligent Biosolutions Incorporated has decided to implement a 1-for-10 reverse stock split. This is a common maneuver often used by companies to boost, tat, their share price, which can make their stock appear more attractive to institutional investors, and potentially avoid being delisted from exchanges that have minimum price requirements. What is really important to understand, though, is that a reverse stock split does not in itself improve the company's business or its financial health. It is like cutting a pizza into fewer slices each. Slice is bigger, but you still have the same amount of pizza. The company's long-term success will depend on its actual business operations, its ability to generate revenue and manage its costs, not on the mechanics of its stock structure. Looking at the financials before the split, the company was already facing significant losses per S-Hair and a substantial number of outstanding shares. The reverse split makes those per-share losses much larger numerically, but again, only because there are fewer shares. This move might be a necessary step to meet certain listing requirements, or to appear more appealing to a broader investor base, but it doesn't solve the core business challenges. The main risk here is that if the company does not improve its underlying business performance, the stock price might continue to struggle even after the SPI. The number of authorized shares remaining at 100 million indicates they have room to grow, but the key will be profitable growth, the lack of fractional shares, and cash payment for them is standard practice, and should not cause major concern for most investors. In conclusion, Intelligent Biosolutions Incorporated is undergoing a structural change in its stock to potentially improve its market perception and meet exchange requirements. However, investors should keep a very close eye on the company's actual operational and financial performance going forward, as the reverse split is a cosmetic change, not a fundamental business improvement. Alright, that is our breakdown of Intelligent Biosolutions Incorporate's latest filing. What is your take on this reverse stock split, and what do you think it means for the company's future? Let us know in the comments below if you found this analysis helpful. Please hit that like button and subscribe for more deep dives into corporate filings, and don't forget to join our Discord community linked in the description. Thanks for watching. See you next time.